Hey, this is Jeffrey with another edition of Stock Smart, March 25th, 2021 edition. Hope you're doing well. Market, well, it sucks right now. Not many places to hide. This is the time you need to stay calm and invest on. If you're watching on YouTube, by the way, hit the subscribe button below. Really appreciate it. Thanks for subscribing, building the list, and growing every single day. Show reach and increasingly, and the totals are going up on a daily basis, so that's great as well. March Madness, so yeah, I was a little frustrated with my entry. So I dipped another toe. Want to take another chance in ESPN's second chance pool. I'm just going to give you my final four. I'm going to go with Gonzaga, Alabama, Baylor, and Loyola of Chicago. Loyola of Chicago had an interesting game against Oregon State, a very hot team, a 12 that beat the 5. Loyola of Chicago, though, playing very well going into it. And then I have Gonzaga over Baylor in my final. So there you go. We'll see what happens. It's great to be in it again after having a bracket that was totally decimated. But we move on. Just like investing, you move on, you stay calm, invest on. VIX is up slightly, and we're getting oversold almost on the S&P 500 oscillator, which is key. Getting another big down day. So we're going to go negative probably 1 or 2 on the oscillator today. Could be a good chance or a good time to pick up slightly on different positions you really believe in, things that you're going to hold for a long time. 10-year notes down slightly to 1.60. Let's take a look at the chart of the 10-year because although it's moved a lot, the 10-year's been so much higher over history, over the period of time. And in fact, over pretty much 10 years, the 10-year generally is at 3%. So 1.56 it's at right now, 1.59 I should say. That's not very high. And the overreaction probably to this 10-year note moving is because of inflation. And I think, again, I've talked about inflation many times. Inflation probably is not correct right now as far as the readings. I think that the readings are incorrect. Everything that I'm seeing and hearing is that inflation is much greater. As we talked about port to port, how a container, shipping a container is 3 times more, all the imports. But look at the 10-year note. You know, if you look at it from a period of time, in 2019, the 10-year note was higher, it was 1.71. You go out to 2018, 3.10. Now that's the average generally over the last 10 years, about 3.0. Go back to like 2007, you know, the thing was around 5%. So we're still at extremely normal lows. I mean, the extreme lows, I should say. And the average probably of the last decade is about 3. So maybe we're too excited about it, but there is inflation, and that's a reason for these growth stocks to continue to get hit, and they are. But today the market's just going down in total. It's no more special. The Nasdaq's going to be down 1% today. S&P is going to be down close to 1% today, and that's just what's happening. Big announcement coming on the show in the next couple of weeks. I can let everyone know. We're going to start promoting something new. Can open up a new area of excitement, entertainment. Going to bring in new topics on the show. And it should be a really, really interesting adventure for me and for the listeners. Let's take a look at a stock. Peloton. Yep, Peloton. So here's what their marketing language is. And I gave it away already because I think you're going to get it. We operate at an in-home fitness platform for live and on-demand indoor cycling classes. The company pioneered connected technology-enabled fitness and the streaming of immersive, instructor-led boutique classes for its members. It operates through 3 reportable segments: connected fitness products, subscription, and other. I don't know what other is. What is other? Okay, technically, the stock's getting just absolutely decimated. Down again today. It's a key support level. It's really key. It's at $100 right now. Off the highs of, massive highs. Highs were in the 170 range on this stock. So we're looking at it now. I mean, it has fallen from grace massively. 52-week high was 171. 52-week low is 23. So that's a big range. So when you look at the stock trading right now at around $100, if it breaks support here at 100, this thing's going to go down to, I think, 60. And here's the issue with this stock, right? If you have bought, so people are going to go back to gyms, right? I'm going to go back to the gym. I have a gym in my house. I'm lucky. I have one. But other people are going to go back to gyms because they like the social aspect of going to the gym. There's people who, I purchased a Nautilus a set of weights from a guy, and he told me, he goes, it's a great set. I got a great deal on it because he pretty much was giving it away and he hardly used it. And he said, yeah, I had this idea that I was going to work out at home, but I never really liked it because he wanted to go work out at the gym. And that's what people are going to do. They're going to go back to their gyms, whether they have an office gym where their company pays for it, or they go back to like a fitness, a 24-hour fitness or one of those clubs. They're going to go back. And if you have a Peloton right now, you bought it already. You did it. It's a good piece of equipment. It's going to last a long time. You will pay for the classes. And here's the key thing in this stock, right? 80% of their revenue comes from, ding, 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 the bike. 20% of their revenue comes from the classes and what they call other, which are other equipment and devices they're trying to get people interested in, are things like they have a treadmill, I think, and some other equipment that they sell, some other yoga, stretching, and weights equipment. But it's such a small part of their total, growth and revenue. So 80% comes from the bikes. And my belief and the thesis of investors, because it's happening to the stock getting just absolutely bludgeoned, is that people who have the bike, they have it. And everyone knows about it. They ran tons of commercials. So are they going to be adding bikes? Sure, people will still add Pelotons and buy Pelotons, but not at the rate we saw during COVID. And certainly this stock and this company is good and it's going to last. But how long, no one knows. And does it deserve the evaluation or the stock price at 170? Obviously not. And this stock probably is going to sit back into a range probably around $60. That's what it looks like. And it's breaking that support. And it's headed down probably to 80 next. And if it breaks 80, then you're looking at a stock that'll sit where it's really comfortable in the 60 to 70 range. Massively bad chart on the technical read. And if you're in it, you may want to consider getting out of it. So I had a question.
The average investor.
From Richard. And we talked about what you should ask your investment advisor. But maybe we should have started this with what you should ask yourself. That's what Richard wants to know. He said, what should I consider before investing? And that's right. Like before you go to the movies, you're like, well, what am I in the mood for? It's no different, but people don't do this. It's no different though. If I'm going to go to a movie, I'm like, what do I want? Comedy? You want a serious drama? There's reasons why the movie theaters put out certain types of movies during certain times of the year, I should say. In summer, people want like action flicks, things that are kind of funny. Towards the winter, we want some more serious kind of dramas. Generally, if you look at the schedule and releases of movies, it's kind of interesting. They play into kind of the mindset of what people want. In the summer, we want action flicks, exciting. In the winter, we want more drama, serious, when people stay indoors more. Length of time, those are all factors in making movies and release dates. But what about when before you start investing, like say you're going to invest for yourself, do you ask yourself some questions? Like, do you have a plan? Those are good questions. And Richard wants to know, what should I consider before even starting investing? Well, number one, what's your goal? Do you want to buy a house? Do you want to save for your kids' college? Do you want to save for your own retirement? Do you want to pay off your credit cards? Like if you watch Susie Orman, she's great, right? She's always like, don't invest until you've paid off your debt because you're not going to return. If you have 20% on a credit card, you shouldn't be making more than 20% in your investments. You should consider 7 to 10% a good return. So pay off your credit cards first. That's what Susie Orman would say. So what's your investment goal? That's the first question you should ask yourself. And then if you start investing, you're like, okay, what's my investment or risk tolerance? I was talking to someone last night, very conservative. She was talking to her financial advisor, and I was just speaking with her, and I said, what's your risk tolerance? She's like, I'm good with money. This is where you get to get into the psychology of the person. And as I kind of, unfolded the conversation a bit, I got to the fact that she is used to being on her own, independent person. She doesn't have someone else to rely on. She's not married. And she's used to taking care of her own finances her whole life. So that's a person who, she's smart with her money. It wasn't that she didn't have money. She had plenty of money, but she wants to be sure it's safe. And she's relying on herself. So she wasn't comfortable with taking risk, and that's perfectly all right. There's investment styles for someone like that as well. But that's a question you need to ask yourself. Now, what happens? Now, this is a great question. What happens if my investment goes to zero? So, when the Dow Jones originally started, 1896, the Dow Jones, invented by Dow Jones, there's only one company that's still around from that original Dow Jones index, and that's General Electric. And so stocks go away. It's real. My mom was a long-term investor in Sears. My grandmother worked there. I think the stock was inherited. My mom watched that pretty much go to zero. I don't know where it is now. I think she sold it before it went to zero. I don't know if Sears is still around. I think they were trying to revive it. I haven't looked at it in a long time. But stocks go to zero. It happens. So what happens? What are you going to do? Are you going to be devastated by that if that investment goes to zero? Don't make the investment. This is a big question too. What's your time horizon? Are you 22? Can you invest for 45, 50 years? Are you 70 and you want to protect your investment? Do you need to take money out in the next 10 years? You want to buy a house. You need it for college. Do you foresee any big expenses? Do you want to go travel? What's your time frame? How long can you sit with that money? Someone was asking me 2 days ago about Bitcoin. I said, look, I think that as for a learning experience, everyone should put a little bit of money into Bitcoin. And again, I'm not getting paid by Coinbase, but I bought Bitcoin on Coinbase because I wanted to see what happened. I put a little more in than most people would probably put in, but I have that money and I don't need that money right now. And so as long as, investment like in Bitcoin, which does have more risk than most things, it's down 7% today. It was up to as far as 60,000, now down to 51 because it's traded so much. But make sure that you don't need liquidity with that money. If you need it to be liquid, then you're going to probably sell at the wrong time because you're going to feel pressured about the investment in general. Now, when would you sell an investment if you bought it? How would you know? You're expecting a company to grow. Are you a long-term strategic investor where you buy great companies, hold on to them into the future? So you need to know that. Now, if you're going to invest with somebody, who are you going to invest with and why? How do you trust them? Do you look up their website? You meet them in person? You should. Do you get referrals? Referrals from trusted sources. Generally, a trusted source in this industry is a trust attorney. They refer a lot of business. Are you diversified? If you're investing for yourself, do you have a diversified portfolio? No more than maybe 5%, 3 to 4% in most holdings. Do you have special knowledge? If you're in the technology industry, I have many friends in the tech space, all different kinds of companies. You may know more. It's not insider trading, but you may know more about an industry and why it could grow. And if you do, and this was big for Peter Lynch, ordinary people have a big advantage over investment professionals like myself. I do have some advantage. I've been in the tech space my whole life. I still work in these products. But if you work in a product, let's say you're a developer and you were building software applications and you didn't want to pay the massive licensing fees that you get at a place like Oracle for their database. So you chose like punky upstart MongoDB. Well, you liked it, right? MongoDB, MDB, ticker symbol. The stock has really blossomed over the last 2-3 years. It's a great investment. And you may have known that when you first started using it. So when it went public, you like the software, you know your friends use it. Well, that's a reason to invest. Invest in things you know and like. So do you know more about an investment than other people? And why do you still own it? Are you owning it just because you just didn't trade it or you didn't pay attention? And then finally, should you do it yourself or should you get a professional? And the real difference in this is most people, and this COVID's been different. This is one of the things. And people are at home and they're able to really watch CNBC or the other programs and check out the news on these companies. Keep them entertained. This was entertainment for a lot of people over the last year. Big boom in retail investing because people are at home. That's going to go away a little bit. And as I said, network operations people are going to be blocking these sites, these Robinhood sites, news sites about stocks, other sites, they're going to be blocking them. But should you manage your own investments when you're looking at them maybe twice a week or once a month? My mom, you can call it strategic investing, or you could say just not there because my mom had things that she just wasn't paying attention to. And many people do. That's not uncommon. That's very common. In fact, that's typical. Most people don't look at their investments, and that's good for a lot of people. One of our very first clients in my business as an advisor told me about how she purchased Apple stock a long time ago. Never touched it. Just had it. Well, that was pretty damn smart, right? That Apple stock did really well, split many times, was a big part of her wealth. So it's okay to not always look at it, but you need to know, should you be managing your own money? Or should you have someone else doing it? Well, hey, thanks again. Thanks for all the questions. You can send them to Jeffrey@jeffreycamus.com. If you're watching on YouTube, please subscribe. Use that red subscribe button. We'll see you again next time on Stock Smart.